Let's kickstart the class. I'm Kazim Wendy by name. Welcome to Equity Professional. Don't forget you can ask any question either offline, online, as you like. We have about 3 people that will be taking you on this. We have Mr. Wasu, who is a team lead, myself, and one of my senior professional colleagues, Mr. Ibrahim Saka, will be doing for this diet. Okay. The course in front of us this night is TAS IAS 12. Let me share the link. Let me share my screen. I hope you can see my screen. I hope
Yes,
you
sir.
can. Good. If you look at our financial statement, there's statement of profit or loss. Yeah, let's start. We are IAS 12. Income sources. Before we go to the task itself, if you look at the statement venue, you have your cost of sales. After the cost of sales, when we less revenue for the cost of sales, then we have gross profits. Then, after the gross profits, let's say operating expenses. We don't want to go by distribution admin, operating expenses. After the operating expenses is less, we also have the finance costs. Then this will now give me profit before tax, which I will now less my tax. Tax expense. Follow me, please. You see this tax expense I'm listing is a combination of current tax and deferred tax, which we are going to get very well now. The tax expense that go to the POL has this combination, current and deferred tax. Now, IAS 12, scope of IAS 12, don't forget, there are so many tax we pay to government, such as withholding tax, personal income tax, VAT, personal profit tax, capital gain tax, yes. But the tax IAS 12 is talking about, the scope of IAS 12, what it's talking about is 2 things. How do we calculate current tax? Then how do we calculate deferred tax? This is the scope. Don't forget I have told you earlier, addition of the two will equals to the tax expense that goes to the POL, although it has an exceptions. We are still coming to that. Now, for me to calculate current tax, so after we have said that, for current tax calculation, to calculate current tax, no issue as such. because the seller borrowed from the laws of tax to give us how to calculate current tax. I will apply a formula which says accounting profit. After I've gotten my accounting profit, but don't forget who is using accounting profit. Accounting profit is being used by an accountant. Don't let the principle be part of you. You don't need to cram. What is accounting profit? Accounting profit is arrived after all expenses have been deducted except tax. Meaning that the tax, if you come to net profit, accounting profit is the same thing as what profit before tax. Therefore, I will now add back all disallowable expenses, such as depreciation, donation to political party, provision, and co. I will add back. I will now less taxable profits. I said taxable profit, sorry. I will less allowable expenses. Sorry about that. I will less allowable expenses. All the allowable expenses, such as capital allowance and not taxable revenue, I will less that. Immediately that is less, I will now less allowable expenses. I will also less not taxable revenue, not taxable, because he has suffered tax initially, just as dividend. This will not give me taxable profits. Taxable profits. Will I have gotten my taxable profits? I will now apply the tax rate, taxable profits to it. Please mute yourself, please, for God's sake. Then the tax rate will not be applied. Don't forget the tax rate is a percentage. This will not give me current tax. I'll now have my current tax. Don't forget the current tax is being affected by last year tax under provision on over. This is my current tax. But last year tax, you could pay correctly or not, because tax is an estimate in the financial statement. When we are running the theory, I will tell you everything. So we will now go to here and say, okay, this tax of this current year. So if they ask you current tax, is it tax paid or recovered in the current activities? Please mute yourself, please. So this current tax can be affected by last year tax, which can be over provision or under provision. For over provision, we less in the current year, we less. But if it's under provision, we add. Mr. Wasu, can you please help us note people? Over provision will be in the credit side of the trial balance. Our provision will be in the credit side of the trial balance. Somebody is disturbing this class, so what is the issue now? Over provision will be in the credit side of the trial balance. While under provision will be in the debit side of the trial balance. This is it. So this is all about you need to know on current tax. Don't forget we said the scope of IAS 12. Scope of IAS 12 is on two things, current tax and the DVAT. These are the two scopes of IAS 12. Now let's move to the current tax. Let's move to the DVAT tax, which we are going to kickstart the lecture with. If you know DVAT tax, current tax is walkover. Let's go to, let me share another screen. Before we, let me.
Hello, sir.
Yes, I'm with you, ma'am.
Sorry, we're not really copying it right now, but we'll be able to get it later, right?
I can't hear you.
I say we're not really copying what you are writing down now, but we'll be able to get it.
Yes, that is the normal protocol. Immediately in class ends, I send you everything. And I've always sent some question to you and also some solution to it, which we are going to be
sir.
picking questions and solutions, okay? But
Oh,
the one
okay,
I'm writing
sir.
now, I will surely give you immediately after the class.
Okay, sir. And does this have a material?
The material is sent to the group. Maybe you are just joining the group. I sent the
Okay, no.
material this evening.
Okay. Thank you.
I sent the material this evening. I don't know whether you have seen it. Okay. What is DVAT? DVAT is about difference in view that brings about DVAT to show the impacts of the tax we are going to pay in the future in the current year financial statement. What brings about DVAT? Don't forget, it's not a tax per se, it's the impact. Views. Different in views of who? Different in views of accountants and the tax person. Accountant, this is an accountant. This is the tax person. Accountant will prepare the accounts. Tax person does not prepare accounts, they are just accounts. Then if you go to this, they prepare the account using IFRS and IAS. Why these are just the accounts using tax law? That is why they are superior. The way we see things, this one we say depreciation, accountants. Tax person we say no, it's a capital allowance. This person will say carrying amount and item is recognized in the financial statements, other asset or liability. Carrying amount. The tax law is say no, there's no like carrying amount is what? Tax base or tax written down value. This one will say accounting profit. This one will say nothing like accounting profit is a taxable profit. So we have differences in the way we see things. We have differences. These differences cannot be of two types. It cannot be permanent difference. Permanent difference. Difference or temporary difference. For permanent difference, there's nothing I can do on permanent difference. All permanent difference are disallowable expenses. The temporary difference cannot be of two types. It can be taxable temporary difference, and deductible. Deductible TD. What I've been saying since morning does not make sense. This is where it becomes meaningful. Taxable difference will lead to what? Defer tax liability. Taxable difference will lead to deferred tax liability. And deferred tax liability occurs when the carrying amount, who use carrying amount, don't forget accountant, is greater than the tax base. Who use tax base to give me deferred tax liability? Take note of that. Why deductible difference will lead to deferred tax assets? Deferred tax asset occurs when the carry amount is not lesser than the tax base. It will give me deferred tax assets. That is it. This is what you have to know. This is for the exam purpose. I've told you the way I look at it in your level, it's only 6 ways it can be tested. This is for the exam purpose. It's only 6 ways it can be tested. For this your level, in the final stage, I had 2. For example, look at it now. If I say PPE, if I say look at it, if I say PPE in our book of an accountant, I say, okay, PPE. The carry amount of the PPE is 80 in the book of accountant, because accountants use carry amount. Tax base in the book of the tax people, in their own document, they have it as 60. This has created a temporary difference. We are no longer on the same page. What is the difference now? 20. Is it a deferred tax liability after applying the tax rate? Is it a deferred tax liability or deferred tax asset? I will now interpret when the carrying amount is greater than the tax base, is higher than the tax base, it will give me deferred tax liability. So we have a liability. Let's assume 30%. I'll just say the tax rate 30 times 20, 60, deferred tax liability. Before I proceed, because you must pass. Here in equity professional, we give our best for students to pass. Any question before I proceed? What I've been saying since morning, I have shared it in the document for you. Let me show you. This is it. Income tax is about current and deferred tax. What do you need to know about current tax? Calculation of current tax and adjustment of the previous year current tax. For the deferred tax, temporary difference and movement of deferred tax to POL, you will get everything. Everything. When they give you the question, you will not see question again in November. Look at it. We start with current tax. Current tax. How do we calculate current tax? This is the formula according to IAS 12. Said, okay, accounting profit, add back disallowable expenses, less allowable, not taxable revenue, taxable profit, and tax rate, we get the current tax. Then we adjust for over or under provision. If it is over, less. Under provision, you are still going to see everything. Then we move ahead to the deferred tax. Say what brings about deferred tax is a difference in view. We prepare accounts, they don't prepare all those things. Then we have permanent difference. There's nothing we can do to it. They're all disallowable expenses. Then temporary difference can be of the two types, taxable difference and deductible difference. Deductible difference can lead to what? Deferred tax asset, while taxable difference will lead to deferred tax liability. This document I'm showing you is available on the platform. Deferred tax liability occurs when the carry amount is greater than the tax base. And if it is deferred tax asset, carry amount is less than the tax base. Let's take question 1 now to illustrate this. Now, what can be inferred from the standard? Look at it. IAS 12, what can be inferred? What we can deduce? What can be taken from IAS 12? Somebody is breastfeeding or breastfeeding a baby. Please, he's taking care of the baby. That's good one, but help us move to man. What can be inferred from the standard IAS 12 on deferred tax? When carry amount of an item in a financial statement is greater than the tax rate, it will lead to deferred tax liability in where? Statement of financial position. When carry amount of an item in financial statement is lesser than the tax rate, it will lead to deferred tax asset at where? SOFP. But when depreciation is greater than the capital allowance, you will see all. Let's take question 1. Let's take question 1. Osborne Limited. Question 1. Let's start with that. Question 1. Osborne Limited. Let me share my screen. Osborne Limited. Question 1. Follow me, please. Let's go to the requirements. The requirement says calculate deferred tax asset or liability to apply in the statement of financial position for the next 3 years, and the debit or credit charged to the tax expense in the statement of profit or loss. Good. Look at it and now say, yeah. For the next 3 years, 1. This is the solution. 2, 3. The one that will go to the statement of financial position, which can either be deferred tax asset or liability. Then the one that will go to the POL, which can be deferred tax credit / charge, or credit is also known as income for the next 3 years. This is it. And that's okay. After I've gotten this, I'll now go to the question itself. Husband buy an asset for 150,000. 150,000. What is the cost? He bought an asset 150,000. Say cost 150,000. At the start of the financial year, the asset has estimated life of 6 years. Oh, he has given me useful life of the assets. What will come to my head in exam? You are talking about accountants. An estimated residual value. Oh, they've given us the residual value to be 30,000. Now I can calculate depreciation. This for accountants. It's okay. Depreciation. Somebody asked question. Let me see. It's in the group chat already, but if you want us to report it, it was sent this evening. Maybe I'll just join in the group. Let me share again. Somebody said you cannot see my share screen. I hope you have seen it now. I hope that has been seen. I'm just reading that. I have resent the material to the platform, both the question and the solution. And go to the platform and see that is done. So I can calculate my depreciation. I can calculate my depreciation by saying 150,000 minus 30,000 divided by 6. So this will give me 20,000. So on yearly basis, for the next 6 years, accountant will charge depreciation. Oh, how do they want us to provide for the capital allowance? This is for the depreciation. Who use depreciation? Accountants. So I'll go to the tax person. How do we want us to provide for the capital allowance? They will tell us. Okay. Let's see. Said the capital allowance are available at the rate of 25%, reducing balance basis, and the tax rate is 20. Oh, they've given me tax rate for the government. But how does the tax people give me capital allowance? They say 25% reducing balance. So for the capital allowance, for the 3 years, we have year one. What is the capital allowance year one? Don't forget, cost is 150,000. Year one, we have not used anything. We have 0.25. That will give me 37,500, if I don't mistake. Then for year two, 150,000, it says it's on reducing balance minus 37,500. For the year two, it said it's on the times 0.25. What is year two giving us? Let's quickly press our calculator to get year two own, which is, you have 150,000, 150,000 minus 37,500 times 0.25.
28,125.
We have 28,125. Thank you, my sister. Then for year three, on reducing balance again, 150,000 minus 37,500 minus 28,125 times 0.25. So we do that for year three. And that's 150,000 minus 37,500 minus 28,125 It's giving me
21093.7.
0.25. 20, let's approximate. We have 21.094. This is it. After this is done, my people, I have gotten this. I will now go to my default task table. I will say, oh, default task table. Let's take the default task table. I can do my default task table to get what I need by saying year, carrying amount, task base, temporary difference. You have tax rates. You say deferred tax liability or deferred tax asset. Good. This is what I will do. I will now show it down like this. Oh, sorry for that. The hand is not straight. Let me quickly attend to this question. 28,125, and what do we have? For the last year, I'm coming. Is it 28,125 or 21,094?
21094.
21,094. Thank you, my sister. Then, after this is done, okay, we can now go to our table that we have created in the exam. This is the first way question can come. And I can assess this one, can go to the last two diets. I will now say year one. What is the carry amount? On the date of purchase, 150,000, we purchase an asset. We would inform the government, the tax people, that we have bought an asset with evidence so that we will not talk tire, receipt and every other thing. Oh, that's okay. In the name of the company, they will also record it 150,000. They will not charge depreciation and capital allowance. We will charge depreciation of 20,000, while capital allowance of 37,500 was granted. This has created a temporary difference. At the end of the year, in our book, we have 130,000. But in the book of the tax people, what did they have in their document database? I will not say 150,000 minus 500.
112,500.
What does it give us?
112,500.
We now have 112,500.
500.
Good. As it creates a difference here, there is a temporary difference. What is the temporary difference now?
17,500.
How do we get 17,000? I say 130 minus 122,500, which is now giving 17,500. I will go to the TR, the tax rate given in the question, which is 20%. So in exam, you must look for depreciation rates when this kind of question is tested. Well, how do I know this is what I will do? They will tell you they buy an asset. They will give you the rate of depreciation, rate of capital allowance. Don't forget, I told you that it's only 6 ways it can be tested. I want to show you all the 6 ways. And the one they use to test, combined, you will see it. Now, 20%. Good. I will now multiply the 20% and 7,500, but I will ask myself first, is it a deferred tax liability or deferred tax asset? Don't forget, we say when the carrying amount is greater than the tax base, it will lead to what? Deferred tax liability. How much is the liability now?
35.
35. I will now come here. Year one, I have gone. The one that will go to the statement of financial position. deferred tax liability. Are you seeing it?
Yes, sir.
I will go to the second one again. Closing balance of year 1 will be the opening balance in year 2. We are close with year 1. Then we are going to 130. That's what we are going to open to year 2. We are with child depreciation / capital allowance. Depreciation is 20,000. So what is the capital allowance in year 2?
28,125.
28,125. So this will give me 110. Why this will give me what? 112,500 minus 28,125.
84,375.
84,375.
84,375.
Has it created a temporary difference? Yes.
Yes.
Yes, sir.
What is the temporary difference now?
25,625.
25,625. 20%. Is it a deferred tax liability or deferred tax assets?
Deferred tax
Deferred tax
liability.
liability.
How do I know it's a liability? Because the current amount is greater than the what?
Greater than
How much is the liability now? Oh yeah, let's multiply.
5,125.
5,125. That's all. Don't forget the closing balance in year 2 will be the opening in year 3. I'll not say year 3. But I can quickly go and write my system to get this mark. What do you say?
Please, the explanation you just gave now concerning why it's a deferred tax and the
That means you are just joining us.
Hello.
Look
I've
at
been
this
racing. I've been racing to follow up.
look at this place. Look at it. It's very simple. Look at this place. What can be inferred? What can be deduced? What we can get from IAS 12? When carrying amount of an item in the financial statement, carrying amount. Don't forget who makes use of the language carrying amount. Accountants. What we have in the book of accountants is not more than what we have in the book of the tax people. It will lead to what? Deferred tax liability at where? Statement of financial position. But if it's otherwise, when the current amount of an item in the financial statement is not lesser than the tax base, lower than the tax base, it will lead to deferred tax what? Assets. In where? Statement of financial position. This is the two we are still dealing with. Look at it here. Do you know why we have deferred tax liability and deferred tax assets now? Is it clear? If you look at this one, at the end of year 1, 130 minus giving me this. Current amount is greater than the tax base. It's a liability. That's why we have liability here. So how do we get 0.25? It's stated in the question. The way they grant us capital allowance, they say it's on reducing balance basis of 0.25. The person asks that question says on reducing balance basis. Now, do you clear when it is liability, when it is asset now, before we proceed?
Yes, sir. Thank you.
Now, for the year 3, I will do the same thing.
This one.
Depreciation, capital allowance. You have 90,000. What is the capital allowance granted in year 3?
21,094.
84375 minus 21794. What does it give us?
63,281.
60.
3,281.
Has it created a temporary?
Yes, sir.
Yes, sir.
Has it created a temporary difference? Yes. What is the difference now?
26,719.
94 naira.
36.
719.
Tax rate of 20%. Is there a
Five
default tax
three.
liability or default tax asset? When the
Default
carrier
Default
is
tax
tax
greater than the
liability.
Because
of how much now?
5,343.8.
lady's husband that his name is Adam.
5343.8.
Let's approximate 5344.
Yes.
It looks like the lady is calling the name of.
That is it. That is it. This is the first part of the question. I will go to my statement of financial position. That's okay. I have 5344.
Why we not having water?
In year 2, let's see what we have as a liability. 5125.
Let me
5125.
share water.
This is it. This is the requirement 1. Then the part of the requirement say we should go to P or L. The one that goes to P or L, we have to look at it. I want you to pay attention. How do I know the default tax that go to the P or L? Movement in default tax to P or L. It's either charge or credit. How do I know? Oh, that's okay. Movement in DT, default tax to P or L. It's either it's a credit or charge.
John V.
Don't forget we have been for 3 years. Year 1, year
But I don't know
2,
why anytime
year
I
this
Somebody should
one is
mute
not
yourself
this
now.
one is not.
Mute yourself.
Opening balance. What do we close with? Closing balance. In year 1, what is the opening balance? The question did not give us.
Hello, sir.
Yes.
Sorry, when is movement in the deferred tax to
P or
POL?
L.
Is it is it credit or charge? I'll be credit or debit charge.
You just wait, ma. You will see it now. You will see it. Just wait. You will get it. It's not hard. I will explain everything. Now, opening balance is 0. What do we close with? Yeah, look at it, ma. It's 0. I don't have deferred tax before. It's 0. It is now increasing. When it is increasing, it's a charge. Charge of value 35 minus 0. This is what will go to the POL. The closing balance in year 1 will be the opening balance in year 2. What do we close with in year 2?
5125.
I will go to what I have done, my table. 5125. 5125. Is it increasing or decreasing? It's increasing. My liability, my deferred tax is increasing. It's a charge. Charge of how much? 5125 minus 35.
2125.
21. Are you sure?
No.
5125 minus 35.
1625.
1625. 1625.
This will now give me 1625. This is what goes to the POL. This is statement of financial position at the end. The closing balance in year 2 will be the opening balance. What do we close with?
5344.
53, it has increased again, it's a charge. Let's assume year 4 was not there. Let's say year 4. Look at it, ma. We have the closing of year 3 will be the opening, 5344. We now have 5,000. It has decreased. This is a credit. I will now come here and say charge credit. Esma, is it clear when you said charge your credit? Is it clear? Or should we need to go over it again?
No, sir. What I what I was asking is that if you look at the question, it was saying debit/credit charge. So when you now wrote credit/charge, I wanted to know if that was a mistake. Like, is this supposed to be credit/debit charge or something? That was what I wanted to clarify.
Okay. But have you got what? Is it clear?
Yeah, it's clear.
No, but in this question, we don't have year 4. Just an example. Let me clean that. All we have is charge.
Hello, sir.
Yes.
We're not having any charge for year 3.
It's because I want to explain. We have charge.
Okay, sir.
How much is the charge? You say, you tell me, ma.
219.
19.
Huh?
219.
That is it.
219.
That is it. $219. So I'll go to the question 219. Although I'm filling the gap.
No, because you're always the one
3,
calling
5,
now. Now that because you're always the one
1, 6,
calling
2,
now.
5,
Now that you got it, change
219.
remember to check up here, you are quick to call.
This is it. But we have not
It's
done
not
yet.
bad. It's not bad.
We are look at this thing. Calm down and look at it. We have not done yet. Look at it. Year 1, 2, 3. Depreciation. Capital allowance.
Yes, sir. What was the idea of this one you are doing?
What do you say?
Like, what's the table all about? Is it financial statement or?
Just follow. You will get everything. Just follow. Just follow. Year 1. Depreciation is 20,000. Capital allowance 37,500. I see create a temporary difference. What is the tax rate? Is it a charge or credit to POL? Is it a charge / credit? This will give me 17,500. What is the tax rate? 20%. 20% times 17,500.
35.
35.
That will give us 35. Year 2, 20,000. Is it a charge or credit? We are still coming. What is the capital allowance in year 2?
28,125.
8125. 20%. 20% of 8125.
1625.
1625.
Look at what I'm doing. It will be giving you the one that will go to the POL. I told you, calm down. It's only 6 ways. All the accounting entry, you will see it, where to debit and credit. We are just starting. Follow it. Everything is only 6 ways. All the questions, 25, we have more. The one that talks about debit and credit, you will see. The one that talks about calculation of current assets, everything is there. It's a total package. You just follow it little by little. I cannot jump to accounting entry now, but you will know the account rate. Where do we debit? Where do we credit in our financial statement? This one said you are still going to need it in your published account. Everything will be clear to you. This one will give me pure head. Look at what I've said.
Excuse me, sir, please. This one that you're doing, what is it about?
It's a command. I need to do.
You know,
Calm
cool, I
down,
need
calm
to
down.
explain it
Hey,
now.
calm down. Hey, calm down. Just follow in the next 10 minutes. After I'm done, ask question. Look at what we can infer. Some question will not give you the bar and assets. You will now interpret from depreciation and capital allowance. It will charge to P or A. When depreciation is greater than capital allowance, it will lead to what? Deferred tax credit. If they don't call it credit, they will say deferred tax income. So that is a credit or income to where? P or A. Look at it again. When depreciation is lesser, like what we are doing, depreciation is lesser than what? Capital allowance, it will lead to what? Deferred tax charge or deferred tax expense to where? P or A. Why do we need to know this? Some question will not give you the bar and asset. Second weight can come. First one will say the bar and asset. So asset, this, no problem. Some question will not say they will just give you the depreciation and capital allowance. And ICANN has not tested that one before. They will not ask you for the same requirements. What is the deferred tax asset or deferred tax liability that will go to sector financial position? And when I will go to the POL? Or you are doing combined, you can easily do your things sharply because you know the principles. Go to last two diets. Simple question for 20 marks on deferred tax because you understand these principles. So these 4 principles is key that you can infer. Are you coming from the asset angle? You bought an asset? Or are you coming from the depreciation angle? If you go to question 4 in your material that are sent to the platform, you will see they only give you depreciation and capital allowance, and they are asking us for the same requirements. How do we go about it? That is the second way deferred tax question can be tested. Look at it now. Let me share my screen back. Year 3, 20,000. What is the capital allowance in year 3?
21,094.
21,09.
1094. 20%. What does it give us?
21,818. That's 219.
219.
Yes, sir. Depreciation is greater than capital allowance in year 3.
Okay.
Depreciation is what?
Sorry, it's a
I
mistake
will now
here.
interpret now. When depreciation is less than capital allowance, it's a charge, not
It's a
credit.
charge.
When depreciation is less than capital allowance, it's a charge. That's all this is, a charge. To where? P or L. See what we have gotten in the P or L. This is what we have gotten in the POL. But how do I now get the statement of financial position? How do I now get the one that go to the statement of financial position? Using this approach the same way. Yeah. 1, 2, 3. Opening balance. What do we close with? Closing balance. Year 1. There is no opening balance given in the question. During the year, we have a charge of how much? 35. 0 plus 35.
35.
The closing balance in year 2, in year 1, will be the opening in year 2.
35.
What is our charge in year 2?
1625.
1625. 1625.
5125.
5125. In year 3, opening of year 3 will be, closing of year 2 will be the opening.
5125.
What is now the charge in year 3?
The credit.
219.
What do we now close with now?
5344.
5344.
Oh yeah, ask your question now. Oh yeah, start asking question. I want
Hello,
to
sir.
play.
Hello, Mr.
Ask
Kazim.
question. Yes,
Hello, sir.
I'm with you, sir.
Okay, thank you, sir.
Thank you, sir.
Of all you have been calculating and presenting this morning, I got it well, but where I'm confusing or I do not understand better is this last table that you have just prepared. For that, the one that will go to profit or loss, or this one that will come to statement of financial position. Can you just come about it again?
Okay,
I did
good.
not understand this table.
Oh yeah, sir, look at it. How do I get the one that goes to POL? Why am I doing this table? I said question can come in another format. I told you 6 ways is where the question can come. It's only 6 ways. The minute you can grab all the 6 ways, you are good to go. Somebody asked, where are we going to present in the financial statement? Calm down. You will see everything. Now, if the questioner give me depreciation and capital allowance, and he say asking me for the same requirements, depreciation, the same question, we are modifying it now. It's giving me depreciation on yearly basis 20,000. This is the capital allowance he charged for the whole 3 years. He will now ask me, calculate the one that will go to the statement of financial position, deferred as asset or liability. And the one that will go to the POL, which can be charged or credit, will now ask me. I will now remember the principles that said when depreciation is greater than the capital allowance, it's a credit. But when it is lesser,
Charge.
it's a charge. I will remember where does credit and charge goes to POL. If it means somebody is telling you that deferred tax credit, statement balance sheet, run away from that person. He must have a mental issue. Because if you are talking about deferred tax credit or deferred tax charge, it goes to POL. I told you that the total tax expense that go to the POL is a combination of current tax and deferred tax, which everything has been embedded. What you will do here will surpass what I will give you. And that's okay, no problem. Let's proceed further. We have gotten our charge based on our interpretation. How do we now go the one that goes to the statement of financial position? Year 1, the way I've done, I'll say year 1, year 2, year 3, opening balance, I don't know. Closing. The question does not give me opening balance of year 1. Then charge, the one I've got in here, charge of 35 goes to the POL in year 1, charge of 35. Then 35 plus 0. 35 plus 0 will give you the closing balance. What is the difference between this? I'm going to tell you the difference between this and the other one. The other one, we have known the closing balance. Here, we have known the closing balance and we have known the opening balance, closing and opening. We only minus it. The closing minus this to give me this. But here, we did not know the closing balance. We only know the opening for the first year because it's 0, and the charge that goes to the POL for the year, the charge for the year. We add it together to get the closing. My brothers and sisters, know today. Sir, is it clear what I'm saying?
Yeah, I'm with you, sir.
Now, my brothers and sisters, know today. How do we determine the one that goes to the POL is only 2 ways? Let me show you. Determination of different tasks, credits, or charge that goes to POL is only 2 ways. That's okay. Determination of different tasks, credits / charge to POL. Don't forget, another name for credit is what? Income.
Income.
Charge is what? Expenses. Now, one is by comparing, I will compare the opening balance with the closing balance. This is one. The second one, analysis of depreciation and capital allowance. But he has a comma, but provided depreciation and capital allowance are the only source of temporary difference, are the only source of TD, temporary difference. You will see get what I'm saying very well. Are the only source of temporary difference. You look at it. I said I compare the opening balance and the closing balance to get the one that goes to the POL. Or, that's okay, no problem. They've given me the depreciation and capital allowance. I will interpret. We have done 2 ways. The question can be tested. Is either you say you buy an asset or you give me the depreciation and capital allowance. I'm still going to do that again before we move on.
Yeah.
Oh, you ask question.
Hello.
I'm with you, ma.
Yes, sir. So,
ṣé mo ti bẹ̀rẹ̀ sí ń kàwé ni mò ń bí sísú kí ní sọ àpèyàn lé ṣé àmàlẹ̀ explain fún ẹ wò.
I don't know who is asking question. Whether one is dropping you.
I know that some of them are just. Hello.
Yes.
Online.
Hello. Can you hear me, sir?
I can hear you, ma. Go ahead.
Yes, I'm saying that I know that some of these workings that we have done for this question are just, let me say, workings like the depreciation, calculation, and then the capital allowance. So my question now is that which of all these things is the actual solution to the question?
The answer solution to the question is the 2 of them. I can decide to use 2 of them. Wow. Because
which 2?
I can decide to use.
So many things there.
Huh?
Which 2?
Okay, I understand what you are saying. Can I get my depreciation and capital allowance from the question? Yes. I can approach it this way. Get my depreciation and capital allowance. I will still get my answer. Secondly, assets. I can use deferred tax liability and assets to get the question. I will still get it. Now, for more clarity, go to question 4. You go, yeah, look question 4. For more clarity purpose, look question 4. For clarity purpose, look question 1. Which of the second point? Ma, oh yeah, question 4. Let me read for you. I'm in question 4 now. Start on PSC. The following information is given in respect of start on PSC. Non-current asset consists entirely of plant and machinery. The net book value of this asset as at 30th June 2010 is 100,000 in excess of the tax down value. In excess. Tax down value. Who use tax down value? Tax people. Net book value. Accountant. He say in excess. Does he pass message to me? When the current amount is greater than the tax base, it will lead to deferred tax liability. 100,000 in excess. That is clear. In asset, a provision of deferred tax, all which related to the fixed asset, is given as at the end, 30th June, 21,000. That's the liability because 100,000 more. Okay. The company capital allowance forecast indicate that capital allowance and depreciation in the future years will be 2011, 12,000, capital allowance 53. Yeah, like that. For the following years, capital allowance are likely to be continued to be in excess of depreciation for foreseeable future. Corporate taxes taken as 21%. Yes, because 100 times 21% give me. What do you require? Calculate the deferred tax, charge of credit to POA. They are telling me charge of credit to POA for the next 6 years, commencing from the 2011 in accordance with the provision of IAS 12. And the deferred tax balance at the end of the year, statement of financial position. They will not give you the buy and asset. They will just give you the depreciation and capital allowance. Can you use this first method? You tell me, where did they say they buy an asset? Can you use this?
No, no, no.
Can you use this?
No, 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 no.
Yes, sir.
Because
Can
cost
you use
of the
this?
asset is not given.
The cost of the asset was not given. I say it's a 6 ways. We are still dealing with 2. Madam, that is asking question. They only give me the depreciation and capital allowance. Interpret. Give us the solution. We are still going to when the table tax rate will change. It's here. It's the which one. Tax will move from 25 to 30, 30 to 35. You will see it. This night, too much question. How do they get 20%? It's in the question. You are saying too many questions. How do they get 150,000? The question says they buy 150,000. Madam, you see any question again before we proceed? Any question? Before we I'm listening, sir. Make na calm down. Let us do it together. You will understand everything. After this one, I will go to the accounting entry. Where are you going to debit? I will show you everything. Exception to the accounting entry, you will see. All the theory, we run it together. You people don't used to read theory. We will run the theory. You don't need to cram anything. Understand the principles. Let it be part and parcel of you. You will produce it at any time. Even your reading will be limited because it's part of you. And in an attempt to twist the question, you will get it. No matter the way they want to twist the question. Maybe you don't know where we are going. Let me show you where we are going.
Hello, sir.
Yes, I'm with you, sir.
Being the introductory, the first class, so our question may be too much. However, maybe as we move ahead, we'll get to.
I'm
So I
talking so
hope
many
to
times.
definitely move forward.
I'm listening to you, sir. You say, however.
I said, however, that as we proceed in the calculations, we will be getting it.
You will get it. There's nothing hard in it. This one is, there's nothing hard in this one. We are still going to group account. We are still going to so many things. We will get everything. There's nothing hard in it.
I'm going to prepare you. We'll prepare ourselves together. So let's see how
Please let us move our
You
mic.
guys should mute
We
your
are disturbing others.
Please, this is the problem. You are not muted. You are talking. It will be affecting others, including even the lecturer.
wọlé tó ń sọ tí wàá máa tó yẹ wàá farabalẹ̀ wàá solve question gidigidi gan
Kazim,
tó ara mọ̀ pé yes o ti solve question question you know even solve question try
Hello,
pass
sir.
question ẹyọ kan péré o solve kó tó lọ wọ
Hello,
exam
sir.
Hello, sir.
Yes, I'm with you.
pé nóòtù yín
I
o
have
nóòtù
a question, sir.
o.
Can you hear me, sir?
I can hear you.
Like this whole question of Osborne now, and then based on what they said, that calculating deferred tax asset and the ability to appear in the statement of financial position, is it like all this movement of deferred tax, depreciation, the rest like that? That is how we are going to prepare it, and the capital allowance. Is that how we are going to prepare it in the exam, sir? Because the network doesn't let me to hear during the time you are explaining it. That's what I'm asking, sir.
The question is, share this question we just solved.
Yes, sir.
How you go about it does not concern them. You just say, give us this thing. There's only two ways you can go about it. By removing the depreciation from your cost of the asset and remove the capital allowance on the cost of asset to get the balance. Then you compare it by saying, okay, when the current amount of an item is greater than the tax base, yes, you can go through that route. Then secondly, you can get your depreciation capital allowance and also go through that process. You will still get the same answer.
Okay, sir.
But when they give you the depreciation capital allowance, you cannot go through question 1. This is what I want to do now.
All right, sir.
9:52. Income statement IAS 12 ó máa ń jáde and question ó máa ń wà somehow so that's why
Hello,
mo fẹ́
sir.
bóyá mo lè post ẹ̀ máa lọ wo page
Hello,
YouTube
sir.
bá di post ẹ̀ sórí
Yes, I can hear
YouTube.
you. That man that
I
is
don't
talking, why
know.
can't you mute?
IAS
That man
12
that is talking with the
Don't
person.
you have a way of
Please mute your
muting some
mic.
people
Kazim, you can mute him. You can mute that person on by yourself.
by yourself, sir? Mute the person permanently.
yes ó wà lára ẹ̀ náà.
No.
Mute the person by yourself. Mute him.
You need to know the IAS 12. Don't be only talking.
Enterprise group,
IAS
please.
12. Income tax. People, IAS 16 is what?
Who is this person now?
Is this person part of this class?
Forget
This is
IAS 2 is what?
now.
Enterprise group. Please mute yourself.
Excuse me, sir.
Because we are not in network.
Continue.
You go solve, you go tired today. Accountant or more IAS. You think they were
Enterprise
you
now.
need to get IAS 2 inventory. Think okay IAS 1. IAS 1 is simple. IAS
See, you guys can mute your phone now.
Mr. Kazu, please try and see if you can mute him.
No, these are basic things. So if they are basic, like
Please, you need to gain access to this group so you can be able to mute all these people. If there's a way, I think that will help.
Mr. Mo, Mr. Wasil, there's something like topic.
topic máa ń gbé kọ topic ẹ̀ ṣé IAS nìkan ló máa kọ sórí kiri ni.
Yes, now.
Wọn ò ní kọ topic ẹ̀ sí. Lẹ́yìn
The
introduction
reason tó fi kíní yẹn síbẹ̀ is because of so that you get familiar with
ìjọ
it.
tó bá fẹ́ bẹ̀rẹ̀ topic ní topic yẹn
Okay,
ìyẹn ló
ó
máa
mọ
kọ
ọ̀rọ̀ tó máa ṣe. Okay, ó ní IAS wà important. Kí n pè lájà ayé abẹ́ wetin be IAS IAS2 wetin talk about? Wàá máa gbó máa ṣe. Wetin IAS still talk about? No, the reason tí mo fi ṣe site you need to increase your
Hello, what is this one now? Mute yourself. Only in so ina, only was me.
tó bá fẹ́ benchmark ara ẹ̀.
Muting
Why is these
yourself.
people talking like this now?
I
Are they
just
part
type.
of this class?
It's not part of.
It seems he's using earpiece, so he's not listening to the earpiece at the moment.
He's not talking.
I don't understand. We are talking.
I think he's muted now.
Mr. Kazim, you have the floor.
You don't have the floor. You people should continue talking.
Hello, sir. I think he has been able to read my chat there. I think that you can go ahead, sir.
No problem, sir. I've sent one to you people. I just want to save and send the. What we have done this night. I'm trying to send it to you people. I will continue. Okay, let's take that question 3, question 4, so that you can understand what I'm saying very well. Stardom PLC, look at it. IAS 12 only deals with current and deferred tasks. We are still on deferred tasks. IAS 12 does not talk about only any other thing than current and deferred tasks. We are still in deferred tasks. We have not gone to current tasks. Even the current tasks, we are going to introduce it little by little so that you can get it very well. Now, they have given me depreciation. What is the name of the company? The company says Stardom PLC. Stardom. PLC. He has given us the year. Capital depreciation. Capital allowance. Has it created a temporary difference? Yes. He asked me, is there a charge or credit? I say, okay. Is there a charge slash credit? Then the next one, oh, we have not put the tax rate.
Yes, sir.
Let's have the tax rate. What is the tax rate given in the question? He said 21%. TR, tax rate. Then I will calculate, is it a charge slash credit? Then deferred tax, which can be either liability or assets. Don't forget, deferred tax has a credit balance statement of financial position. We are still even coming to that. So immediately I've done this, I will now fill in the gap. Say for the next 6 years. But in 2010, no depreciation, no capital allowance. But he said there's a temporary difference of 100,000. Read the question. The question says 100,000. And he has given me 21%. That is why he has 21,000 different tasks. This is it. Said as at the end of 2010, net book value of assets, who use net book value? Accountant. Is more than the tax base. Yes. And he has given me tax rate, 21%. He also given me the different tax as at that year. He now said in 2011, he gave me depreciation of 12,000 and the capital allowance of 53,000. I will now interpret. I will start now. What is the difference now? 12,000 minus 53. What is the temporary difference?
That's 41. 41.
41. I have two options. I can get the one that will go to the statement of financial position direct. Or I can get the one that goes to the POL.
Let us go simple. Like
based on the rules, when depreciation is greater than the capital allowance, it's a charge. What is the tax rate? 21%. 41,000 times 21%. Let's multiply.
8,610.
8,610. I will bring it here. 8,610 is a charge. 8,610 plus 21,000. 8,610 plus 21,000. 29,000.
29,610.
Or the difference is 41. 41 plus 100,000 will give me 141. 21% of 141. What does it give us? 21% of 141.
Sorry, sir, how do you get that one from 1,000?
What is the temporary difference? 53 minus 12,000. What is the temporary brought forward at the beginning of the year? 100,000. 41 plus 100. What is it going to give us?
141.
21% of 141.
29,610.
I can get 29,610 first. As I like, because I understand the principle.
Okay.
I can say 29,610 minus 21,000.
8,610.
As I like it. Shebi na me get my question. You will tell I can. I understand the principles. I can do it anywhere I like.
So I don't really understand this. So
even me, I don't understand though.
I don't understand.
Okay. Oh yeah, wait. Who can tell me what is the charge in 2010? Teachers. Look at it now. Yeah, see what you are doing. Opening balance. Closing balance. 2010. What do you close with?
21,000.
What is the opening balance that did not give me? What do you close with?
21,000.
Charge.
21,000.
I say it's only two ways you can determine. And this thing is only two ways you can determine the one that goes to the POL. It's either you compare your closing and your opening to get the one that go to, or I can say 2011 opening. I can get the one charge. It's either I get the charge or I compare the closing. I write the closing, which I've gotten, or the charge first, 8610. It will still give me. How is this one hard? Look again. Look. Let's do another one. You must pass.
Mr.
Not
Kazi.
only pass, you must pass well.
Hello, sir.
Emati is okay, hello, sir. Wait. Let's do one more. 2012. What is the depreciation in 2012? What is the depreciation in 2012? 14,000. What is the capital allowance in 2012?
40,000.
40,000.
Can we interpret depreciation and capital allowance?
Yes.
From this, can we interpret depreciation and capital allowance?
There's a temporary difference now. Or is it when the depreciation is greater than the capital allowance?
Yes, you will interpret. Is it a charge or credit? The one that goes to the
It's a
POA.
charge.
This is a charge.
It's charge.
We say when depreciation is less than the capital allowance, where is he going to give us?
It's charge.
Charge.
I'll be taken to the POL.
Which you now want? I said that I do this. I take to the POL times 21%. I first of all get this. When depreciation is lesser than the capital allowance, meaning capital allowance is greater than depreciation, it will give me charge. What is the difference?
26,000.
21% of 26. 21% of 26.
5,460.
5,460.
460. Yeah.
That is the charge. I will not add this one, 5,460. Add it to the opening balance to get the closing.
35,070.
Or if I don't want to do that, I will not add the 26,000. The difference. Add it to the 141,000.
They apply the tax rate.
56. That's
167,000.
157.
67.
167. That is 21%.
$1,460.
35,070.
35,070. Or 546. What have you done? Go to the table and do it this way. In 2020.
Where do you get?
That is the question we wanted to ask, sir. It will make it so clear for me.
Oh, yeah. Ask.
Go back to that table, sir. With this table, you have been able to combine what will be treated in the POL and the statement of financial position.
Yes, now the requirement is there already. Okay. It's only this table I will drop for them.
Exactly.
The charge that goes to POL, the one that goes to the statement of financial position, is there already. I'm just using this one as an explanatory note to even buttress. So if they give me 10 years, I will be doing this one for 10 years.
So, sir, I have a question on that table, sir.
On which one do you have on this table?
What if it were to be that it is not a charge, but a credit that is income?
You will see it there. That is what I'm saying. You will see credit there. You will see. And this you will see credit.
Okay. Thank you.
Hello, sir.
Go to
Sorry, how do we get to 157,000?
Hello, sir. Hello, sir.
Okay.
Hello,
Hello,
sir.
I can hear you, man. Oh, yeah, ask.
Okay, my question is the TD. Is it compulsory? We have to be adding it like you have 100. Now, on my book, in my book, I wrote 41. So by the time I'm getting to the charge, I know I'm going to be adding the charge to the deferred tax previous to get the next one. Now, is it compulsory? We have to add on the TD.
Madam,
It's your
you
choice.
To the new one.
how can this one be question? It's your choice, man.
It's your choice. They're giving you two ways.
Anyhow you want it, maybe you know the principle. I can decide to this one we are doing. We are in a work in a class. If I'm writing this exam, I see this question. How will I know what to do immediately? I save my time. I can get the charge. As I like, I can even decide to go this way. It's your choice. My own is to show you everything, how it can be done. Then you can pick. Look at the question, what we did. I can do it either way. It's my choice. If I like, I don't have the temporary difference. I'm still right. I'm doing the right thing. You can even see do finish. Say, I want to do more. See, go do this table. Now you sabi.
Thank you, sir.
Another question. Another question.
Nobody is asking question again. Let's not move forward.
Nobody is asking. I know say you know ask question. You will get everything. It's very simple. You will get everything. After I taught you today and next week, we are go to your park. I say go to your camp park. In short, all this while you are doing, if you have your camp park, you cannot see them there. And if they want to bring question, they lump different question. It's when you read for it, you do your research, you will get all these things. Where do you want to see the table? Go to your park now. But after everything, after this class of different tasks, go and see all the questions. Me, I want to bet you. Go to question. Start going to question. If you cannot solve, that means you don't know what we are doing here. Year 2013. 2013. What is the depreciation?
20,000.
Capital allowance.
36,000.
32,000.
32?
36,000.
36,000.
What is the temporary difference?
16,000.
I can decide to go. I interpret. Which way do we go? Should we add or go straight?
Anyway you go.
Anyway, sir.
What do you think? I think just anyway. I think just listen. 16 plus 167. plus 167,000.
183,000.
180 what?
183,000.
83,000.
Times 21%. It will give me the closing balance.
38 430.
38?
430.
38 430 minus this.
3,360.
3,360. I can decide to pay 21% of 16,000.
3,360.
Half for me 3,360 plus this. Will give me this.
Yes, sir.
Sorry, sir. How did you get? I think you did 38,000. I think 430 before that 3,360.
I did what?
That 38, you get that 38 space before that 3,360. Can you come back
And
again?
21% of 183. I'll get the one that goes to the children. This is the deferred tax balance at the end of the year. I will now multiply this one. It will give me this one first. This minus this will not give me this. Or the difference alone, I interpret. Deferred tax credit or charge. 16,000. Oh, depreciation is less than capital allowance is charge. That's 1%, 3,360. 3,360 plus this. 3,830. 2014.
40,000.
40,000. And then capital allowance 32,000.
Capital allowance is 32.
Yes, sir.
I can decide to add this is the brought forward.
30,000.
It's 40,000.
It's 40,000.
40,000.
Yes.
You don't come now.
Okay.
You don't come now.
8,000.
This is an income.
What is the temporary difference now?
8,000.
You see a charge of credits.
It's a charge. Sorry, it's a credit. It's a credit.
Am I going to add or less?
You will less.
I will not less on here because what is bringing forward? The brought forward is liability. So by the time I less 8,000 from there, or I can decide to go direct. 8,000 times 21%. 8,000 times 21%.
1680.
1680. Credit. This is the credit.
Yes.
My dad, yes. The person that asked for the credit, this is the credit.
I can see that. Thank you.
Credit. How come I interpret it? Doesn't matter. But if I want to go these two routes, this year we're having a credit. 180 minus 8,000.
175.
175,000. Times 21%.
36,750.
Huh?
36,750. 36750.
36750. You minus it. You know the 3430 minus. It's a credit. It will give you this.
Thank you, sir.
For 2015. 2015.
44,000. 44,000. And 32,000 for capital allowance.
How much is the difference?
Also a credit as well.
12.
44 minus 32.
12,000.
This is there a charge or credit?
It's a credit, sir.
It's a credit, sir.
Credit. 175,000 minus 12,000. What we are bringing forward, the accumulated.
163,000.
The liability, I'll minus it.
163,000.
163,000.
Yes, sir.
21% of it.
$34,230.
34.
230.
675 minus 34, 230.
2520. 2520.
Huh?
2520.
20.
2016.
46,000. and 36,000.
Also a credit as well.
That's where you credit 10,000. We have 1, 2, 3, 4, 5, 6, 7.
1,100.
What does he give us?
A credit of 2,100.
Mm-hmm.
Someone just so that will be
It will be 32, 130. 32, 130.
That's all.
Mm-hmm.
Okay, sir.
Any question? Any question?
A little throw light of that 175 under 2019, under 2014, sorry.
What happened?
I want to know how we got this 175 under 2014.
40,000 minus 32. 40,000 minus 32.
Okay.
8,000. Is it a charge or credit? It's a credit. Depreciation is greater. I will less it. 180 minus 8,000.
Okay. Okay.
Ah, people are draining me on.
Huh?
Okay, let me send the question. Let me send the. I don't know what Barcelona was. Lord. You have no this.
Mr. Kazim, are you there?
I'm there with you. I want to send me what we have done. We have the
Just there
booklet.
to
Let
check
me
on you,
see.
maybe you are sleeping.
Just
there to check on you, maybe you have started sleeping so that it will not be that.
Hey, good.
Okay, thank
Hey,
you.
voila. Voila.
Okay, let's go to another question. Somebody's typing. Let's go to let me show you accounting entry. Go to page. You go to question. Be short. Before we go to that, come and be seeing stupid question. Did you used to ask you people? We used to laugh. Let me take question here. Question 6, B part of the question. Question 6, the B part. Question 6. Before I go to the accounting entry, the B part of the question. This one is funny.
The deferred tax assets balance.
Don't worry, I will read. Don't worry. Okay. Look at it now. Question 6, B part of the question 6. The A part is about theory, purpose, and all the which I will list and will run it the next class after all calculation. The deferred tax asset balance and the deferred tax balance of Sanford PSC were 80,000 and 90,000 as at 1st January. The deferred tax movement were as follows for the year ended 31st December 2018. Deferred tax income, deferred tax expense. The income tax obligation and credit related to single tax authority. What amount of deferred tax movement is presented together as a line item with the current tax movement in the POL? What is the current amount of deferred tax in the statement of financial position? How can this one be a question? This is a question they give to professional 8 marks. In short, if you are less busy, go to CR of last night. Deferred tax was tested. Any time they didn't test it for you, they will test for them. Anytime they didn't test for CR, they will test for, and it's very, if you know it now, that is forever, anywhere. Either you are going, go to London, go to anywhere, it's forever. You say as at the beginning of the year, look at the question. You say at the beginning, you are talking about asset and liability that they brought forward. You said, Sanford, look at the question. Sanford. I was just saying, deferred tax balance as at first beginning of the year, which is for last year, 1st January 2018. So deferred tax liability. Said as at the beginning of the year is 96,000. Deferred tax assets is 80,000. What is my deferred tax at the beginning? 16,000. Which is the credit balance in the statement of financial position. Just like your bank statements. Your bank statement is expected to be credit balance. Does it mean you cannot have a debit balance? You can. Yeah. But our expectation, deferred tax in the statement of financial position should have a credit balance. This is the deferred tax at the beginning of the year. You now say during the year, deferred tax, I will go to the movement of deferred tax. Movement of deferred tax in POL. You say you have deferred tax income that will be presented along the current tax that's coming in. You say you have deferred tax expense of how much?
15,000.
30,000.
30 million.
You now have a deferred tax income of 10,000. What is the deferred tax that goes to the POL?
20,000.
20,000. Now, what is that going to be the deferred tax at the end of the year?
20,000 plus.
16,000.
Deferred tax balance at 31st December 2018.
Next question, Chief.
Opening balance 16.
I think they did there.
Deferred tax charge
20.
What's happen again? How can this one be tested? Go to last two diet, 20 marks. FR for doing nothing. The evil strength is calculate current as 3 marks. Pivotas, 20 marks. Last two diets, go and check. For doing nothing. And the student will tell me that he's seen that word, does not know what to do. How now?
Forget.
Mr. Kazim.
Look at last diet question. Cash flow, 3 mark. 20 marks.
Hello, sir.
Ratio, 10 marks. They now give them group that is not a group, the sleepless group. I cannot ever tested. Look at the employment. IAS 36. What I want? That question cannot take 2 hours. The 3 hours is more than enough. But if you don't know what you are doing, it will be like 6 hours. You go there with confidence. Do your own work. Solve so many questions. Practice. Tell me you will not pass.
Mr. Kazim.
Hmm?
We will continue to ask you questions because we want to know.
Ask, continue to ask. Yes, ask.
The one you did the deferred tax balance as at 1st of January 2018. The deferred tax liability is 96,000 naira, while that of the asset is 80,000. It shows that the liability is more than the asset. Yes. And we have a balance of 16,000. That 16,000 will represent balance of deferred excess of deferred liability over the asset, Abi.
Yes.
So that 16,000 is deferred tax liability balance.
Yes.
Okay. So the second one, the expenses is equally more than the income. Yes. So that 20,000 will equally represent charge as well.
That is for the year.
Yes.
Look at these dates. Look at these dates. Is there any different from this? 31st December 2017. This is what they close with. Which will be the
opening balance for 2018. Opening balance for 2017 and opening balance for 2018.
Yes, in that year, see what they make. In that year, see what happened. In that year, this is what you go to the POA. If you are talking about deferred tax, asset or liability, you are talking about statement of financial position, balance sheet. But if you are talking about deferred tax, expense or income, you are talking about POA. Look at what the question says. Let's read the question again for you to very straight. He said, the question says, one of the requirements, he said, what amount of deferred tax movement is presented together as a line item with current tax? Current tax movement in POA.
So definitely they are asking for charge or income.
This is it. The one they are asking for is this. This one. This is the calculation it's asking for. The one that will go to the POA. What goes to the POA is either expenses or income. What goes to the statement of financial position? It's a deferred tax asset or liability. Before we close book, before we call it a day, go to question 26, nightlife. Then we call it a day. Hello. Then you go and read before you come next.
Question what, sir?
Question 26, nightlife. Question 26. Question 35, 99. 99. Nightlife Nigeria Limited is, let's go to the requirements. Make reference with appropriate international financial reporting standards. Explain with your supporting calculation. Any adjustment required in the financial statement, including the note to the financial statement, arising from each of the three above, okay? Taxation. Question 25. Nightlife Limited is a manufacturing of agro-allied equipment. The company has presented the draft financial statement for the year ended May 31st, 2020. The final copy of this financial statement needs to be completed, including audits, by July 31, 2020. A review of the draft financial statement was done by the Finance and the General Purpose Committee of the company. It was discovered that the company has not considered the impact of the following items in the draft financial statement, which may require adjustment to the draft financial statement. Taxation. The company income tax charge for the year has been correctly estimated as 117. There was over provision for company income tax of 2020 of 122,500 in year 31st May 2019. And the balance of deferred tax was 160 in the same date for 2019, opening balance of 2020, the closed balance of 2019. Nightlife Nigeria Limited had invested in plant and machinery as at 31st May 2020. The plant had a carrying amount of 19 and a tax base of what? 13. Note, company income tax is 30%. Very good. He has given me a multiple question. Yes, let me solve. You now ask the question. If you want us to read the question again, I can go back. Let me share another screen. Now. Right. First, I'm saying computation of current tax for the year ended 2020. He has told me that income tax for the year ended. The income tax for the year ended, he has said it. For the year 2020, this year, current tax, he has given me. We are now introducing current tax, small. Now, he said there is over provision. For last year, for year 2019. What do we do to over provision? We less. Now, people tax, which can be credit or charge, do not know. I'll go to the question. Movement in deferred tax to POL. Movement of deferred tax to POL. He said opening balance, which is the closing balance of last year. Opening balance. How much is the opening balance? He has given me to be 160. He now said as at year end, you have a temporary difference. Items. PPE. Carrying amount. Tax base. Temporary difference. Tax rate. See a liability. Deferred tax liability / deferred tax asset. Say they have PPE that create a temporary difference. PPE. You say the carry amount of the PPE as at the end of the year, it was 19. And the tax base is 13.
Yeah, for the year.
As it creates a temporary difference, yes. What is the difference?
600.
What is the tax rate given in the question?
30%.
Is it a deferred tax liability or deferred tax asset? Liability.
Yeah,
30% of 600. Go to the question. I will go and say, what is the opening balance? Closing. Charge of 20,000. Account. 20,000. Charge. $1170 minus 122,500 minus 20. Give me the figure. Deferred tax charge. Give me the figure.
$1067.50. 1,067,500.
Good. Accounting entry. Let me put it beside. Extracted statements of profit or loss for the year ended 2020. Tax expense 1,067,500. Extracted statement of financial position. Current liability. Current tax. $1170. No current liability. Deferred tax. You are still going to do this one. This is the accounting entry. You are still going to do it in the statement of financial in your published account. This is it. This is it. Oh yeah, ask question. Ask question.
Sir,
Good.
the deferred tax charge. I thought we were going to, after lessening the over provision from the current tax, I thought we were going to add the 20,000 to the balance. Is it are we minusing it or we're adding it?
20,000 we add now. Say charge.
If we are adding it, then with this, are we going to get? I don't think we'll get this amount though.
Somebody call the amount for me. 1170
It's correct. It's correct. The amount is correct.
Almost
Thank
70 million.
Thank you for the confirmation.
The amount is correct.
Sí. Wọn kú lóòótọ́.
This enterprise again.
Any other question before we call it a day?
Thank you.
So I know any other question, but the way you solve the whole this thing, I just hope that you're going to stage it the way from one stage to another, rectify it, like arrange it very well so that we can follow it up the way.
The way I did not get your point.
Like your board
step
is
by
wide.
step.
If you go left, you go right, you go back, you go forward. So I'm just trying to say that I hope that you just arrange it like from one stage to another. Okay, this is first, this is second, this is third, so that we can really get the stages of everything you've done.
Okay, I've heard you. What we did is today, one. What we have done today.
Yeah.
Before we close, let me show you something. I get what you are saying. Please let me go to question 16, ABC. You are not solving. Question 16. Are you there? Question 16. If you go to the requirement of question 16, this is the level I want you to be. Identify the task base and the temporary difference for each of the given items. Calculate the current task. This is the combination where we are going. Calculate the current year task for the year ended 31st December 2016. Calculate the different task provision required as at 31st December. And calculate the income tax expense for the year ended 31st December 2016. This is the combination of everything. So that, my sister, what have we done today? One, how can they test me? And what we have done today that we need to learn. One, question can come by saying the purchase and assets. You will now look for, you calculate depreciation from the question. You also calculate the capital allowance.
The temporary differences.
Then you will now start interpreting at the year end. When the current amount of an item is greater than the tax base, you start looking from that perspective. Can exam come that way? Yes. I can come that way before, more than one. I think twice. The recent bid to last to that or to that, you can go and check. They will just tell you the buy an asset. Which is the best? Second one, they can give you depreciation and capital allowance to interpret.
Okay.
This is the second one.
I've done that as well.
Which we are going to interpret.
Your
You
this
see
thing
the principles I have given you. You cannot even see those principles in textbook. If I'm lying, I can bear with you. Go and take your books.
now what is the
Unless you go to foreign textbooks, you will see them. When you can pack or look at it, you may likely not see. This is the second thing you need to know based on what we have done this night.
Number 3.
Which question will tell you of this one? The question we saw on husband. Husband, do justice to this. Why this one is about stardom? Then the third one, I just show you the accounting entry. To know what do we call deferred tax assets. I say we are talking about deferred tax assets. And we are talking about deferred
tax
liability. My sister, you will be thinking of SOFP. Then the next thing, if you are now talking about deferred tax income, income is also called credit, or credit is also called income. You are talking about deferred tax
expense,
charge,
or income or credit.
Expense.
What are we talking about? This is what we just did this night. That's what you go and learn. What I've done this night, if you not have any question, I say you can ask any question. No question is foolish. Either physically, online, offline, spiritually, as you may like. This is my number.
Spiritually.
I am Kazim. And if you want to see me in person, in Equity Professional, come on Sunday. I will be taking FR and CR in VI. We will discuss. So, my sister, you don't need to confuse. We are still going to wear something deeper.
Question, sir.
Yeah, I'm listening.
Okay, sir. Thank you for the efforts yet. If after this class, sir, I know you are recording the class. For how long can we just get the recording at least before the next class? One. Number 2, in case, can we equally be allowed to in case we miss a class here, I will want to just come and benefit that topic in your physical class. Can we be allowed to do that?
These 2 questions you have asked me now is not my own question. Why? It is the management. I was called to do a duty. The first one you said, I'm sure they will record it. That is certain. Mr. Wasi will record it. Mr. Wasi is the leading lecturer in this area.
Okay.
My own duty is to deliver the lecture. Now, Mr. Wasi will now tell us which day is he dropping it before the next class. That is one. Number 2, that if you miss a class online, can you cover up with it in a physical class? I cannot say yes or no. It is when those who can give you answer to this is Mr. Wasiu, because he's a management person. I hope my answer is understood.
Lastly,
Okay.
On behalf of everybody, since you cannot answer that question, help us to deliver that question to the management and we'll get a response from you.
Okay. For I
Sir,
will
I have a
convey
question.
your question to them. Then, okay.
Sir, the last question we solved now, it says with reference to appropriate IFRS. So I want to know, with that statement, is it that they expect us to interpret this particular answer?
Which
Or what?
IFRS do we use to? You know, each IFRS governs one particular thing. Which one is this? IAS 12. What we have been doing this morning is IAS 12. IAS 12 only covers two things, current and deferred tax. Nowhere you can see it again. Under current or deferred tax, IAS 12. Just like IAS 16 covers PPE. So what we have been doing is just the principles of what? IAS 12.
Okay, thank you, sir.
Thank you, ma'am. Now, before we leave, finally, we are in together. No doubt. Those who know me, they will tell you, please, endeavor to read or go back to what we have done, or the video and every other thing, before the next class. Before next class, I will increase the complexity of the question. I will raise it. Raise them is the next class. So, thank you. Have a wonderful night rest.
Thank you, sir. Thank you. Really appreciate it.
Okay, sir.